Quick update on my Robinhood portfolio, currently at $579,713. Past year up 51.81%, so up $197,000. I do have another $60,000 in a high yield savings account, and I'm in the process of consolidating some of my brokerage accounts, so I will be adding about $30,000 into this account. Still deciding how to deploy it into the market, but I will keep you guys posted when I do so. Scrolling down a bit, you can see my portfolio. I do have one Ethereum and another couple in my GDAX account, Coinbase account. So this is makes up 0.52% portfolio, or $3,014. I'm up 372% on this position. My largest position is NVIDIA, which is big in the GPU data center space. This makes up 23.87% portfolio, or $138,000. I'm up 1,632% on this position. And I do see there's a lot of potential upside with the demand in GPUs and AI and all the growth in artificial intelligence. Next is Apple. This makes up 6.95% portfolio, or $40,000. I'm up 346% on this position. Apple makes a lot of the revenue from iPhones, MacBooks, iPads, wearable devices, Apple Watch, and their Apple services too, like Apple Music, iCloud, Apple TV, and services makes up a good chunk of their business and continues to grow, even though their devices that are being sold like iPhone are slowing down. But I think when there's a refresh cycle and people need to buy new phones or devices, they do tend to stick with Apple once they are in the ecosystem. Next is Vanguard Growth ETF. So this makes up a lot of growth companies and is fairly diversified. This makes up 6.79% portfolio, or $39,364, up 16% on this position. I might add more to this ETF since I think it's fairly diversified, and it's a passive way to get exposure to different growth stocks. Next is Amazon. This makes up 6.77% portfolio, or $39,265, up 79% on this position. They're big in e-commerce in the US, and they also are in Amazon Web Services, cloud computing, and they dominate in the cloud computing space, even though Microsoft continues to take market share slowly. But I think Amazon will continue to dominate as they continue to innovate in the space. Next is Microsoft, makes up 5.73% portfolio, or $33,000, up 288% on this position. And Microsoft, they're big in enterprise services, cloud computing, productivity, like Microsoft Office Suite and personal computing, and they continue to grow those businesses. Next is Meta Platforms, which is parent company of Facebook, Instagram, WhatsApp, Oculus, virtual reality. Majority of the revenue is from online advertising. This makes up 5.11% portfolio, or $29,607, up 154% on this position. I do think there's a lot of potential upside with Meta, given that they have so much data from their users, and they can really target their advertising using that information. And they're also diversifying into artificial intelligence as well with different language models. So we'll see how they will continue to grow with those services. Vanguard Information Technology ETF, which is a lot of technology companies. This makes up 4.16% portfolio, or $24,111, up 275% on this position. Next is Vanguard S&P 500 ETF, fairly low expense ratio and high liquidity. This makes up 3.9% portfolio, or $22,609, up 78% on this position. I might add more to Vanguard this ETF specifically. Next is Visa, which is big in payment processing. This makes up 3.21% portfolio, or $18,581, up 130% on this position. Mercado Libre, which is an e-commerce and payment company based in Latin America. This makes up 3.18% portfolio, or $18,420, up 59% on this position. Next is Taiwan Semiconductor Manufacturing Company. Makes up 2.95% portfolio, or $17,097, up 68% on this position. And I think TSM will continue to grow as more companies are dependent on chips. Alphabet Class A shares, which is a parent company of Google and has voting rights. This makes up 2.74% portfolio, or $15,896, up 199%. I also have Google Class C shares, which does not have voting rights. This makes up 2.3% portfolio, or $13,339, up 178% on this position. Next is Costco, which is warehouse retail, makes up 2.03% portfolio, or $11,775, up 188% on this position. A good chunk of the revenue is from membership services and the profits from the products they sell. Next is CrowdStrike, which is a cybersecurity company. Makes up 1.8% of my portfolio, or $10,514, up 119% on this position. United Health, which is a big health payer. This makes up 1.64% portfolio, or $9,500. This is up 189%. Next is Shopify, which is big in e-commerce. Makes up 1.58% portfolio, or $9,158, down 6.43% on this position. Next is Tencent, which is a big Chinese technology company, big in gaming, payment processing, social media, among other services. This makes up 1.56% portfolio, or $9,070, down 3.35% on this position. Adobe, which is in the content creation space, makes up 1.56% portfolio, or $9,019, up 25% on this position. And they did partner with OpenAI with I think Sora or some other image video processing service. So I think with artificial intelligence integrated into this, they'll be more innovative and be more competitive. Next is Johnson & Johnson, which is in consumer health, medical devices. This makes up 1.49% portfolio, or $8,626, up 14% on this position. So even though the capital appreciation isn't great, but they pay a solid dividend and a fairly stable company, and we'll continue to plan holding this long term. Next is McDonald's, which is in the restaurant space. This makes up 1.38% portfolio, or $8,017. This is up 66%. Home Depot, which is in home improvement, makes up 1.36% portfolio, or $7,898, up 85% on this position. Berkshire Hathaway, this is Warren Buffett's company, makes up 1.33% portfolio, or $7,714. I'm up 114% on this position. Next is Disney, which makes up 1.24% portfolio, or $7,202, down 1.42% on this position. You can see it's down 9% because of their earnings report. A lot of negative sentiment with Disney, their streaming services, trying to get that profitable long term. Palo Alto Networks makes up 1.02% portfolio, or $5,893, up 28% on this position. Next is Alibaba, which is a big e-commerce cloud company based in China. makes up 0.98% portfolio or $5,706, down 53% on this position. So I don't plan to continue to buy any more or sell this stock, just because I do believe there's a lot of upside in Chinese technology, but I don't want to get more exposure to it just because I think I'm exposed to it with Tencent and Alibaba. Fortinet, which is another cybersecurity company, makes up 0.73% portfolio or $4,256, down 14% on this position. PayPal, which is a payment processing fintech company, makes up 0.69% portfolio or $3,995, down 40% on this position. Block, parent company of Square, makes up 0.62% portfolio or $3,603, down 55% on this position. AT&T, which continues to pay out dividends, but their capital appreciation is not that great, makes up 0.55% portfolio or $3,175, down 50% on this position. Twilio, which is in communications, makes up 0.12% portfolio or $722, down 75% on this position. I might liquidate Twilio at some point. Same with Teladoc Health. This makes up 0.06% portfolio or $347, down 86% on this position. So I'm down, and I don't think there's much growth in the telehealth space, given there's a lot of closures in healthcare or retail trying to get into the telehealth space, like Walmart, for example. And I think it's a fairly saturated market. Baozun, which is a Shopify of China, makes up 0.06% portfolio or $336, down 92% on this position. I'm just going to keep this in my portfolio to remind myself not to get overexposed to Chinese technology companies. So that's all the stocks in my portfolio, specifically Robinhood. I do have other accounts, but I don't plan to consolidate those or share those anytime soon. What stocks are you holding? Comment down below. Remember to subscribe to my channel for more videos like this, and see you in the next video.